GKFX Prime presents the Market Analysis Webinar.
Good morning everyone, welcome to another weekly webinar. Well, what will this week hold? Last week, I have to say, in all my years of trading, that was one of the most fascinating weeks of trading ever. Really is a big power shift in the markets towards people like you and I, towards the retail traders and away from the big institutions. The things that are happening with GameStop, with Wall Street Bets, with Reddit, really fascinating stuff. And now you can see on the screen in front of you I have silver. The reason being, if you'd read this morning's newsletter or even Friday's newsletter, you'll know that Wall Street Bets are currently targeting a short squeeze in silver. And so now we actually are pushing into, as you can see, $29 per ounce in silver. After a big rally in 2020, we've been pulling back, but it looks like we broke out, pulled back to that broken declining trend line, and now we're rallying up and we're testing the old highs. Now, of course, the proposed short squeeze here from Wall Street Bets is going against some big players. So certainly the market could get bashed down from beneath $30 per ounce in silver, but it is in line with the broader longer term trend. One of the things that we've talked about many times, the debasement of currencies and the attraction of precious metals, the reason that silver and gold both did well last year. Silver also has a number of industrial benefits that are increasing with time, particularly around the use of silver in electronic vehicles and the use it has in smartphones and other devices. So silver is genuinely a useful thing, and it's a store of value when currencies are being debased like they are right now from central banks. So really interesting, and just technically in the chart in front of us, what we can see here, obviously we went through this pullback period in silver. Now we had a little bit of strength come through here. This is when things started to change. We came down. We didn't quite take out this low. We actually didn't manage to close below there on a daily basis. This was our low down here. We didn't even get down to the old low. We came up. Quite a strong rally up, but still within that kind of downtrend context. You're looking at for it to come down to test the lows, didn't even come close. Rallied right up, broke through this declining trend line. So that was interesting. But obviously sellers came in at this level again, bash, the price came down, but it held on to the previous high. We rallied up again, made new highs. So at this stage, we're making higher lows and we're making higher highs. Now the price got bashed down again. These are volatile assets. This time we took out a lower low. We took out the low here, but didn't close beneath it. After a bit of chop and change, we had one day in which we closed beneath it. Then the very following day, after having a second, or actually arguably third test of this declining trend line, we moved up again. So it's been very choppy, tricky trading, but through the chop, what you can see is that basically we made higher highs, characteristic of an uptrend, and we really didn't materially make a decent lower low. We really couldn't properly close beneath this low, and we certainly didn't even get close to this low down here. So basically, technically, higher highs, higher lows, you're calling it an uptrend. Then this, if you look on a kind of shorter time frame chart, or maybe that was too short term, you can see it's basically an inverted head and shoulders pattern. Left shoulder, head, right shoulder, and we broke above this neckline, and we've been powering upwards, obviously in the context of this, these moves from Wall Street Bets. And now here we stand as of today. We gapped higher on the Sunday open, so we closed down here. This was the highs of Friday, which was a big move up on Friday. Closed I think probably 6% up or something, and then we gapped up another 7% today. We gapped up as the new week started, and now we're building on the price from here up at 29 as we currently sit. Now the big resistance is at these old highs, which is about 29.80. It's short of the big 30 level. But if you're projecting, say for example, this last leg up, not even counting this leg down here, but if we're just counting this sharp move higher, and we project it from the kind of Maybe we can put it, if we're conservative. Okay, let's be more conservative. Put it from this lower breakdown area. That's talking about 36 in silver, and we're 29 right now. That's if you treat this as a sort of as a flag pattern. If we take it from all the way down here and we project this level up, then we're talking about, I can't even scroll that high, we're talking well over 40, well over 40, if I want to see, can I do it in this weekly chart? No. Well over 40 per ounce. So this could be absolutely massive, but you know, equally it could just peter out, of course. But certainly key to see what happens to the price at these old highs. Wouldn't be surprised to get a reversal, but as I said, the structure of the market right now is bullish. So if we do get a reversal from this high, don't necessarily think it's a double top. It might just be an opportunity to buy prices at a lower point, perhaps down at this high again here, back now near 28. Alright, so that's enough of silver. Let's switch back around to our normal course of events, which is firstly looking at the major currency pairs, euro, pound, yen, also the stock market, and gold, and crude oil, and then Bitcoin. Again, I know I always say this, normally people are probably happy with the content that we cover here, but if there is some extra market you want us to cover, please, you know, drop us a note in the video, drop us a comment, and we can obviously address that and discuss, you know, what you want to talk about. Okay, so here's our daily chart for the euro. Now again, looking at the kind of structure of the market, bull trend, hit 123 thereabouts, pulled back. This, you know, you could characterize as a low here, but it's only just for one period. So not the most super substantial low, but nonetheless you can sort of see it did work. Well, basically we took out the low, kind of trended down here, but we didn't really make any serious highs. We just kind of dropped right down to the previous, you know, took out this low, but we weren't able to take out this low, so we held here. It's basically in the context of a pullback within an uptrend. I wouldn't say that we've broken down to a new downtrend yet, but I think if we do take out this low, then we've had at least a drop, taken out an old low, and then if we take out a second low, it's not just a kind of like A, B, drop down, then C back up again. It's, you know, A, B, and C and D and E, kind of, it keeps going down. So we're looking at taking out this level here, which is just these old lows, which comes in at 120.60 roughly, 20.50 even, 50.60, and then we're looking at this declining trend line through these peaks here as our potential catalyst for an upside break. So that would, in the longer term context, we are, you know, we've only taken out one low to me, and so if we hold on to the old low, then we move past this declining trend line, and then particularly when we move past this high here, this one here, then we're back into uptrending territory and we're looking for moves beyond the old high. So I don't know what happened to my trend line here, got a bit moved out of place, but this is what we're angling for, and you can see we're kind of staggering up a small uptrend here on the shorter term time frame, but still within the kind of range context. So here's our first judgment for whether we're breaking out of the range, is this declining trend line, and then this is our next one. Let's move over to the pound. So the pound, again, I'm just kind of drawing in the fact that we are in a kind of just generally choppy uptrend right now. So we took out the old peak here, pulled right back down again, but didn't take out the low, put in two highs here, then took them out, pulled right back, came back down to this low here, but nowhere close to this low, so still a pretty steady uptrend. Here, weren't able to take out the high, but pull back, make a higher high. So we're making, we're barely making higher highs, but we are making steadily higher lows, And at the moment you can see that we're basically just above these two highs here in terms of the kind of breakout. We've really stalled in here, but there's nothing, the momentum seems to have stalled out a bit, but we could just be pausing for breath. Nothing particularly to indicate that this trend is reversing. Our first indication would be coming down and taking out this low here at 136. And then what happens next? Do we just take out the low and then start trending higher again after the pullback, or do we take out a second low? But again, we've not began that process yet, and so for the time being we're just trending higher, and that's the daily peaks that we put on. And you go down to the shorter time frame and you can see that this is the key resistance here, 137.50 I believe, or thereabouts. Yeah, pretty much 137.50 is the level to beat. Once we get a close through there, that really is a breakout. Looking for again higher prices, but as you can see, even though that will confirm the continuation of the trend, is not necessarily a great trade, because you can see that the breakouts haven't really made much progress here, because it's been a very slow and steady uptrend. In this particular trend, it's been better waiting for those larger dips back towards one of the round numbers, for example, or some retracement of the rally up. So for the time being, we're watching for this confirmation of the newer trend, but I would argue that it's not necessarily a great breakout opportunity given the kind of sluggish speed of the trend. And then we're looking at this low down here just above 136 as a possible indication that actually the trend is starting to to slow down, and then it actually shows some confirmation it's reversing. Moving to dollar yen. So finally, after all the weeks that I've been talking about this this idea happening, it really took its time, but finally we've had a breakout above this falling wedge. And to me, obviously, I've been saying it all along, I think that will be a bullish change once we get the breakout from the wedge. And what I'll be looking for is the price to come back and challenge this key pivotal level over here, which is 106. So I think even if this kind of general bearish trend continues, still I think we can having kind of been in this downwards decline for so long, I think we can kind of get some pace to the upside towards 106. But that would, to me, would be a natural level to look towards, and then maybe we sell off again from there. There is major resistance before we get to 106, because at the moment it's the 200-day moving average and it's this old high here, and indeed that could stop the price rise. But my only reason for part of the reason for looking at 106 is just thinking what would actually make this trade worthwhile, because we've already come up a good amount. If we pull back to 104.50, 104.50 to 106 is 150 pips. So if you're assuming that back under 104 and back below the declining trend line kind of writes off the trade, then you're looking at a potential 3 to 1 here, roughly speaking, from 104.50 up to 106. If you're just targeting below 106, then obviously it's just a lower risk to reward trade, and you're going counter trend in terms of the 200-day moving average and the general slope of the chart. Let's see if this breakout actually does have legs. We may get an even deeper pullback down to, let's say, 104 or something like that, given the fact that we've run into these two old highs here and stalled a bit. That's entirely possible, and it's just ahead of the 105, which again is a bit of a round number. So maybe people were looking for an opportunity to sell back into this downtrend at 105. So let's see how much of a pullback we get from this breakout. and whether we can actually get some further. We'll see if we can even get as high as 106. So moving swiftly on to the stock market, and finally we broke. I mean, I drew, I think, over the last few weeks various versions of this, but basically there's a trend something along those lines, right? Even if you draw it kind of through there, or even through here, basically we kind of took out this trend, and if you use this last one, then we're just about holding on to it at 3,700. And so we came lower as futures opened at the weekend, but we're rallying back up again. Here in this instance, I wouldn't necessarily categorize this one little candlestick as a low. So for me, we've really just taken out one low. So we're in a correction where we've taken out a low, but we haven't taken out the next one yet. So say we move up a bit from here and this one becomes a low. I want to see that low taken out before I have a bit more confidence in turning bearish on this market, because for the time being it's been a very strong uptrend. And you can see, like, even in these pullbacks here, it was such a strong rally proceeding that actually there weren't really any proper lows to really register here. And so the market did have a pulp steep back, but it only came back to where the last real distinct low was. At first it pulled back to the most distinct high. So the market kind of rallied up, right? He put in a high here, rallied up with barely any corrections, pulled back basically to that old high again, but then it was ready to correct more. But that was only one. Say if that's the low, this one here, which is the same as that high, took out one, but never formed another low that it properly took out again. It came down here, didn't really take out the low, didn't close lower, and rallied back up. And it was a sideways market. We came back down to there again, but you can see the point that just taking out one old low isn't enough. That's just normal in a correction. What you need is the next low to be taken out to confirm the trend reversal. So no trend reversal here in the S&P, similar to the euro. Still haven't had that trend reversal, and the pound is not anywhere close yet. Not to say it can't happen, we just haven't seen the lows being taken out yet. So moving on to gold. Interesting that gold got really, so when silver rallied on, let's get back to the daily chart so we can see properly here. I've drawn quite a lot on this chart. So if we just zoom in a second on Friday, that's this candlestick right here, right? So we rallied right up to the high, and then it just got bashed down from the high, and so a massive daily reversal. Now, as we opened up for the week, we've rallied back up to the top of this range again. We tried to get pushed down to 1850, but it looks like we didn't quite. We gapped up. Market tried to push below 1850, wasn't able to do it. So there's a real battle going on in here between the buyers and sellers. I would have thought that actually, we had that big move lower. We had a bounce. We couldn't really get above this level, and then we sold off on Thursday. Then we tried to rally above, hit that old high on Friday, then got knocked down. Just from these two long wicks, I was thinking this looks quite bearish. The market keeps getting bashed down from these highs. But now, having seen it hold the 200-day moving average and hold 1850, and I've drawn this leveling because it's just kind of this old pivot that seems to be still being an important part for the gold price. We kind of held it as support, broke down. Again, this is a longer term version of the fact that we took out support, but did we take out this low? No, we rallied up, and we actually have been chopping around trying to get back through this yellow kind of support area ever since. So this is a choppy old market, and when it's kind of this choppy and this unclear, unless you're a real specialist and this is the only thing that you trade, I would actually stay clear of gold at the moment, because this is, just look at how I'm drawing in these, like, takes up here we're starting to trend up. We rally up, make a high, pull back, make a high, and then it just rolls over again. So I think after this move, everyone's like, where are we really going with gold? And then again, we sort of try and take out the low, but there aren't any closing lower lows. And then we try and take out this, we get knocked down a few times. So it's very much a battle waging here in gold. I think no one quite knows whether it's going up or down, and probably one of the big things is this 200-day moving average, where we tried to get through it below, rallied up, hit the old high, back down to it again, and it's just I think once we get, say, I don't think we've had this yet, you know, a weekly close perhaps below this 200-day moving average, then maybe we'll have a bit more clear direction. At the moment, you know, looking at this kind of, you know, daily bullish candlestick, it would be good if we took out this level here. You know, then that would be a bit more of a kind of, you know, one broken high, a second high, we'd be back in more in kind of uptrend mode. If I get rid of this for a second, maybe if I delete some of these extra ones, you can see just the kind of important ones. Bear with me. Get rid of that. So we've made a higher low, a high through here, and we want to see if we can make our second high to confirm it. So actually I should have kept that one, just to kind of demonstrate the point. We've made the high, made the lower low, but can we make that second high and then obviously a second lower low, and confirm that actually highs and lows above the 200-day moving average is more like an uptrending thing that we're looking for. Okay, onto WTI. So again, a series of peaks coming up through 53 that looked quite, you know, it looks kind of bearish because we weren't able to get back to the previous top of the range up beneath 54. 53 in the middle of the range was having the price bash back down, but we tried to break lower, and we see it failed here, and we've bought into it 2 times afterwards, and again false break here and buying back into it. So for the time being, WTI is still in its range. As the price currently sits, it's in the middle of this range. 53 has worked several times, so you could try that, but on a 5th time, oftentimes that's the one that breaks. So there maybe we're moving up to challenge the top of the range, and that could work for a short-term sell opportunity potentially at the top of the range. But the overall scenario is that we look quite bullish in oil. We're well above our 200 period moving average on the 4-hour chart, way above it on the 200-day moving average as far as the daily chart. So it's all quite bullish. You know, just I think I made the point last week that we're so far above the 200-day moving average that maybe just some kind of correction is due to bring us back down towards it. But for the time being, we've held this low, so it's not happening. Last but not least, Bitcoin. Similar sort of situation to gold in a way, where we've kind of lost our direction. So it's basically we've moved into a range trading environment with 30,000 as the support, as I mentioned. We did break above this declining trend line, but we saw such a sharp weekly reversal that I think a lot of people will have lost confidence in that trend line break as something meaningful. And so here you can see the break of the trend line, the test of the trend line, the rally up. That's all very good, but we banged into that old high around 38,000 and saw a big move lower. It's volatile as we currently stand. As you can see how I've drawn these previous peaks here, we're making higher highs. Took out this high, but you know, we're still beneath these 2 major peaks over here above 40,000. So we're basically in a massive $10,000 range at the moment in Bitcoin. And so I think trading is going to be choppy until we can really kind of start trending out of there. I think while we're above 30,000, you know, the things still look good. And so, you know, the closest you can get to 30,000 for entry points if you're bullish Bitcoin, I think is good. I think a move below 30,000, and then that's when you have to start worrying again that this bullish idea is probably not quite so good. Equally, any moves up to 40,000 while we're in the range, are kind of high risk, arguably, but also potentially high reward selling opportunities as well if we have some kind of triple top scenario up near 40,000. Right, I'm going to call it a day there. Good luck trading this week. It should prove to be very interesting. We've already had this big gap up in silver. Let's see if we can push up any further, and also some big central bank meetings and the like. So I hope that all pans out for you and provides good trading opportunities. Please make sure to subscribe to these videos if you want to see the next one next week when it comes out. Thank you.